Monday, August 12th, 2019, Maneco 64, home of alternative economics and contrarian views. So Billy and I are back. I'm back from Switzerland. I did do a live stream yesterday afternoon. If you're interested, you can see on my YouTube channel. It is recorded there. It was just under an hour, I think, the live stream. This morning, I want to talk about gold and world GDP, gold in a reset. I've spoken about that before, but gold as a percentage of GDP is something I hadn't looked at, and it's something that I found here in this book that I'm still reading, War and Gold. I'm almost finished the book. It's by Kwasi Kwarteng. He is surprisingly an MP, conservative MP in the UK. A 500-year history of empires, adventures, and debt. I recommend the book, a very good book. And in the appendix of the book, he's got this sector here, and it's called Value of Gold Stock to World GDP. And that's what I want to talk about, where gold could go. I've spoken about the Dow Gold ratio that I think we will have the reset once we reach 1-to-1. Some of you have asked me, does that mean that gold is going to go to 26,000? No, it just means that in relative terms, gold is going to be worth, 1 ounce of gold will be worth the same as the Dow. It could be at 100,000, it could be at 10, it could be at 1,000, it could be at 2,000. I personally think it's going to be more, somewhere between 3,000 and maybe 15,000, within that range. And looking at this will help us maybe try to ascertain where gold will be once the reset is done. Will we go back to a gold-backed system, a gold standard? That would be good. If we even go back to 100% gold and silver system with no fiat currency. But even if we don't, I think the system will have to be reset. So just have a drink of coffee from my End of Fed mug. If you'd like to find one of these, it's in the drink store below. I've got End of Fed. I've got Retire, the Old Lady of Threadneedle Street, which is the Bank of England equivalent of End of Fed. I've got other merchandise as well, like t-shirts and mugs and stickers. So you can look below in the description. I also want to look where the markets are, of course, this morning, and I want to look at gold in several different currencies and how it's making new highs against some really major currencies. I've spoken about this in the past as well, how they're all sinking and they're going to continue to sink, and things are going to get more and more difficult for the general public because they're not aware of what's going on, of the inflation. We're told there's no inflation, but cost of living keeps rising, and that's what inflation is all about. So let's first look at the markets this morning, then I'll go into the GDP and some figures, and then quickly at the charts afterwards. So it's 7:41 a.m. London. Gold and silver have actually been sold off here in the last 20 minutes since I've been preparing for the video. Right now, gold's at $14.92. It's down about $4.50. The high's been $15.02. The low has been $14.91.74. So we're right near the lows, down a third. Silver, that started going down earlier. They're trying to get silver down to get gold down. The powers that be. Yeah, there's still manipulation, even though they're losing control. I mean, we're over $100 from the breakout area, which was $13.75. But they're still trying to control the price. Silver right now is $16.84, down about 13. The range has been $17.03 to $16.82. Patience, I think, is the most important thing to have right now, and hold on. The Dow is up 53, 26,333, up 0.2. S&P 500 is up 9, a third of a percent, 29.27. The NASDAQ 100 future is up 40 or 0.5% at 76.87. The pound is up 0.15% at 120.45. The dwindling pound, you'll see how much it's dwindling against the currency of kings or gold in a minute. The euro is at 112.03, unchanged. Dollar is down against the yen. That's down 0.25%, 105.41. And the dollar is unchanged against the yuan, Chinese currency, at 709. Crude oil is down 0.4%. WTI is at 54.15. Brent is at 58.15. Bond markets, we've got the 10-year yield down 1 basis point at 1.724. 3-month yield is right around 2%. So we're about 28 basis points inverted. We saw, of course, last week UK GDP shrunk quarter on quarter for the second quarter by 0.2%. In the US, you see they've gotten, wise to the GDP numbers. They don't publish quarter on quarter numbers. They only publish year on year numbers, which are much harder to show a negative result. In Europe, they still print the year-on-year numbers and the quarter-on-quarter numbers. That's another manipulation from the U.S. Government there. I think U.S. GDP is actually not great at all, even though it shows 2 or 3% growth. Why? Well, because the U.S. Treasury is running a 5% or even more budget deficit, and that is extra spending. Which counts as GDP these days, or has always done. So, world GDP and the gold reset. So, as you can see here from the book, the highest ratio of total value of world gold stock to world GDP. If you look here, this is like it's almost 100 years now, because we're almost in 2020. They've got it 1920. 1920 was 10%. See, 1940 was 20%. Just at the onset of World War II. And then it dropped to like 3% back in 1970, which was very low. It was telling us that the price of gold was, being suppressed, or was very low. And then we had kind of a market reset in 1980 when the Dow gold ratio went 1-to-1. This ratio of the world gold stock went to 19%. And that includes not just the official holdings by central banks and governments. That includes what the World Gold Council estimates to be all the gold out there in private hands, public hands, everything. And then you can see that by 2000, we dropped to 4%. And in 2010, we were up to 12%. And so where are we now, 2019? So I've done a quick calculation. And basically, we are at 10%. So according to the World Gold Council, there's 190,000 metric tons of gold as of 2019. That's all the gold that's ever been mined in history. Of course, some people estimate that it could be more or less, but I'm going to take that number, 190,000 metric tons. That's 100 million kilos. So you take that, you multiply it by 32.15. That's how many troy ounces per kilo. And you get about 6.1 billion ounces. Multiply that by $1,500, which is pretty much where we are right now. And you get about $8 trillion. And that's 10% of world GDP. You can see here that the World Bank estimates that GDP for 2019 is going to be 88 trillion for the whole world. So that's how I get that number. So if we go back to world gold being 20% of world GDP, That means we have to see the price of gold double to 3,000. Some of you might find it, how can I say, a low figure. And I do too. Even though for the last 100 years, it's, on the high end, of course, 20%. But if you think of what we've had since 1920, we've had how can I say, a century of inflation, of war, of currency debasement. So I think in the next crisis, they're going to need to do more for people to gain confidence back in the monetary system. So we could be talking even 100%. So if you can do the math, 100%, that's 5 times more. So that would be $15,000 per ounce to back world GDP by 100%. Or if you want to back it by 40%, it would be 6,000 and so on. Then you've got the Dow Gold ratio, which I have said in the past that once we get to 1-to-1, there would be a reset. I thought the world GDP and the world gold stock was an interesting one. So let's just quickly look at some charts that I think are really interesting, and I've spoken about this many times, just how people need to protect themselves wherever they are. If they have savings in their national paper currencies, they need to try, in my opinion, as I've been trying, and I'm not recommending it. I'm just saying that this is showing me that it's going to continue to get worse. So let's quickly have a look here. XAU AUD, that's the Aussie dollar. Look at massive bull market here. We've broken the 2011 high, which was around 1850. We're now at 2,200. And this is from before today, so it might have changed today, but not that much. You can see how gold and Aussie dollar is breaking out. Aussie dollar is one of the major currencies, Western currencies. So it's not a third world country currency. Let's look at XAU CAD, or the Canadian. Same thing. We've broken out of 1900, which was the high in 2011. When I did this chart this weekend, it was the close from last week, almost 2,000. Let's look at the currency that we use where I am here in London. XAU GBP. The all-time high was 1194. We're now continuing to go. We're above 1200, 1244. That was the close last week. Another breakout. Let's have a look at in Japanese yen, XAU JPY. Another all-time high. And this is considered like sometimes a safe haven currency, which in my opinion is complete rubbish. But there you go, 158,000. We got up to 160,000. New high in Japanese yen. South African rand, ZAR, XAU ZAR. Massive move higher here, almost 23,000. The previous high had been around 21,000. That's the South African rand. The Indian rupee, XAU INR. Again, massive breakout, 106,202 rupees. So you get the idea. Let's have a look at the Chinese currency. Chinese currency, yeah, that hasn't devalued as much against gold, but it's on its way to the previous all-time high, which was around 12,250. We're now at 10,573. The euro, very much near the all-time high, actually. Very close. You can see there the all-time high was around 1380. We're at 1336 as of last week's close. And then we'll look at the Swiss franc, which is one of the better fiat currencies, but still a fiat currency. That's not as close, but it's getting there. We're at 1455. All-time high is 1680, so we're very close, just over 100 francs away. And then the US dollar, which is still the major reserve currency, that of course has a lot more to catch up to, but we have broken out, as you can see, from the recent, from the high of the last few years at 1375. I think we'll be making new highs prior to the end of the year. Can't say when. So there you go. They're all sinking. They're going to continue to sink. It's not fun to see this, but it's something that we've been predicting for many years, and it doesn't surprise me. I just wish more people would know about this, that their currencies are being trashed, and that their earnings, their salaries and wages are going to continue to buy a lot less. And if they leave their savings in their paper currencies, their wealth is going to be buying a lot less. Of course, if you have 100,000 in the bank and you still have it in 5 years, still 100,000. It's still the same, but it won't buy as much as you buy today. If you enjoyed this video, make sure you hit the like button. Subscribe to the channel if you haven't yet. You can also follow me on Twitter, Steemit, and on DTube. I wish you all a great day. Take care. Bye.